Hey everybody, what's going on? It is James here with Crypto Common Sense. Wanted to shoot a market update video for you. It's just before 10 a.m. Central Time on Saturday, August 24th. And while I slept, Bitcoin dumped. So if you watched yesterday's video, it was actually titled Bitcoin prepping to dump or Bitcoin ready to dump or something. And that's actually happened. So let's take a look first at the Crypto Fear and Greed Index. It actually did bounce all the way up to 39 on yesterday's update, which actually was what I was talking about in yesterday's video. I said that, I thought we would make a high, a lower low, and then a lower high. Now, it didn't make a lower high. It actually made basically double topped here, 39. Okay. Again, a double top needs to actually come down on the other side, so we don't know for sure that's what's going to happen, but that's what it's looking like. So that looked good to me. It found resistance at 39, and it started to dump. The total market cap has once again came down and fell through the 23 Fibonacci level. Let me zoom out and show you this. This is a very, very bad chart for the bulls. All right. If you look, this red line here, right around 253 or 254 billion, has been breached. Okay. Now it's fighting like hell to try to keep it. If we zoom in, you can see that it's just barely underneath it right now, but this is a daily candle that closes in about 9 hours. So depending on what the bulls can pull off today, if we close under that level, that would be a confirmed head and shoulders with a target of down around $95 billion, which would be a drastic bleed out of the crypto market. So I am watching that with quite a bit of excitement. If we take a look at our Bitcoin chart, let's turn the volume off and let's just look at our head and shoulders on the weekly. We can see that we have now fallen underneath the confirmation level, but again, the candle has not closed yet. Remember, on a weekly candle, it doesn't close until tomorrow, so we've got another 33 or so hours to go on that. But it is looking very, very exciting. Now, I'm going to show some bullish things too in this video, so don't get too far ahead of yourself here. We draw our head and shoulders, bam, right? That is definitely confirmed if it closes under that. That's going to be exciting because that head and shoulders has that target that I've been talking about that's way down in the gutter. Okay, that actually puts our price range down around, depending on how you draw this thing, puts us somewhere in the neighborhood of about $42 to $4,400. Again, that would be amazing because it would fill this volume gap that sits over there. If you're not sure what a volume gap is, if you haven't seen my past videos, basically, the volume gap looks like this. We pull a session range up. This volume gap exists all the way back from unsupported resolution. Don't know what that means. Never had that error before. Let's try it again. Volume visible range. There we go. You can see that basically the real support, everybody's talking about 7,000, 6,000, 5,000, etc. But the real support for this move from December until now is actually sitting down at $3,800. We have this big gap down here that really needs to fill. And if we just zoom forward and we just go from the actual start of the rally back in February until now, you can see again, great big gap down there that needs to fill. It is possible, okay, anything is possible. It could be that this right here actually ends up being support down around 8,000, but I don't think that's likely. Typically on these big parabolic moves, the drawdown is pretty drastic, okay? And again, if you watched previous videos, you know that I believe we're actually in a wick-off pattern or a three peaks in a domed house pattern, and I do believe that all of this has been nothing more than a distribution phase, and that we are going to head back down to the $4,000 to $5,000 area at least. All right, so that's what I'm looking at on the weekly chart. On the daily chart, we have this smaller head and shoulders that is yet to confirm. This actually needs to break down below 9,100. Would be really ideal, but even down around 9,500 would do the trick for me because that would be the actual neckline. If you take a look, right here is the neckline at 9,470. Now, that lines up with something else that is extremely important. It lines up with our Fibonacci level. So watch this. If you'll notice, 9,500 bucks will put us just under the 38 fib, and that's actually been trying to hold as support. And that's typically what happens in a bull market or an uptrend, is 38.2 does tend to act as support. We've been getting bounces off of it, but a close under that would be an extremely bearish sign, and it would also, in some opinions, confirm this giant double top that I've been talking about. I like to count tails and wicks oftentimes, just a little stronger confirmation. So the actual, tail slid all the way down to about 9,100. But if you're not a tail guy, if you're a closed guy or a closed girl, right there is the actual neck, right around 95.33. So that would be a confirmed double top. All right. So lots and lots of really bearish things going on. If we draw a Fibonacci levels from the top to the bottom here, we can see that we have actually fallen back under the 23 fib on this entire down move over the last couple of months. We had found support yesterday, came up and tested the 38.2 from the underside. Not yesterday, sorry, this week. And it was basically resistance. 10,903 was the level, got up to 10,953, and it failed. So, more bearish news. Now, I want to point out something that could be bullish, and I don't necessarily think it's going to be, but I do think it's worth keeping an eye on because it's always important as a trader to be open to all possibilities. So I actually drew this up before I went to bed. Price was actually sitting over here at the time, and I said that this very well could be a symmetrical triangle. Now here's the reason that this is important. Symmetrical triangles tend to get these bounces around inside, and then they tend to be continuation patterns. So this is actually a bearish pattern on the bigger time frame, but on the shorter time frame it could turn out to be bullish. Let me explain. So we're coming down into the triangle, so this would be a continuation pattern, or it could be. That means that if we break south of the triangle, that we'd have a target down around 7,400. Again, that level makes total sense. It would confirm our head and shoulders. All kinds of things would start to fall in place, like a bunch of dominoes collapsing. And I think this would just be the first stop, right? I think we get some kind of bounce off of that level, and then on down further south. But here's the thing: you have to be very, very careful about going short here, unless you know what you're doing, or unless you're going to have a high stop loss. Because a lot of times, what you'll get inside of a triangle like this is you'll get a bounce off of the bottom, and it will go back up to retest the top of the triangle. Now, if it retests the top of this triangle, that lines up almost perfectly with the 38.2 fib of the local move, okay? And the price is up around 10.5, okay? If you remember in yesterday's video, I talked about the 4-hour 200 MA is up around 10.5, right? I thought we would get up and test it yesterday. We didn't quite get there, and then we have this dump. It could be, and I'm not saying this is super likely. I don't really think it's going to happen. I think the momentum has shifted, but it could be that we still go up to retest that. And that's really important if you're trying to go short, because if you're going short right here around 10 grand or 9,900 and it pumps up to 10.5, 10.6, it's a very good chance you're going to get stopped out of your short, right? I don't know about you, but if I've got a short open, I really don't want to go negative 5 or 6% on the thing. So got to be really careful of that. I'm watching that. It could bounce up there, and then we could come over here toward the end of August, and then finally dump out the bottom of this thing. So that's something that I'm going to be keeping an eye on as well. Now, somebody commented on one of the videos asking about triangles. I'm not actually sure which triangle they were referring to, but I want to zoom out and show you a couple triangles that, first I'll show you the triangle that I've been calling for about 2 months now, or a month at least, and then I'll show you the triangle that I've seen some bulls trying to draw lately. So the first triangle that I still think is in play is the descending triangle on the very large time frames. And that descending triangle looks like this. To me, go to a daily here. To me, this is the triangle that we've been playing inside this entire time. Okay, we had a high over here of 9,090. We had a low here of 9,071, a low here of 9,108, and this is basically, in my opinion, the bottom of a descending triangle. Descending triangles break south most of the time. They can also break north though, so you have to be careful. Now, if we measure this triangle from the top to the bottom here, it's about $4,700. So when I posted this, a little over a month ago, when price was way back here, I actually thought it was going to fall out here. People thought I was nuts, right? People were like, no, there's no way it's going that low. Because if we measure it, guess what? That puts the price target down right around $4,300. What does that line up with? It lines up with that giant head and shoulders I'm talking about. So people thought I was absolutely nuts, right? Like I'd fallen and hit in my head. I still think this triangle is valid. I still think it's in play. And guess what? Like I said, if it confirms, it's also going to be a confirmed head and shoulders, right? Boom, 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 right? That make perfect sense to have a head and shoulders completely dump us out of the bottom of that triangle. Now, the other triangle that I've seen people drawing who want to be bullish, they're drawing this triangle, okay? It's not that it's invalid. I'm not making fun of them. Technical analysis is, somewhat open to interpretation. It could be that they're right and I'm the one that's wrong. This might actually be the triangle we're in, and this would be a symmetrical triangle. But again, symmetrical triangles are continuation patterns. What that means is because price was coming up when it entered this triangle, it's entirely possible that it's going to come up when it exits this triangle, meaning that what we could see, and you have to be open to this possibility if you're a bear, we could see a bounce off of this lower level and a break right out the top. Or we might see a little bit more consolidation and then a break. Here's the thing. You want to be watching this top trend line very, very carefully, because if it breaks north and we measure the height of this triangle, that is a $6,300 triangle. So if we take that and we measure the breakout target, again, nothing is guaranteed, but the target, well, will put us up somewhere around that $17,000 mark. Now, if we zoom out, remember, it's always important to say, does this make sense? If we zoom out and look, does $17,000 hold any special significance? Well, it absolutely does. It basically lines up perfect with this resistance right here back in January of 2018. In fact, if we draw our fibs, I haven't done this yet, but I'd imagine there's probably a fib level up there. Not quite, not really, okay. But it does line up with this area right here. In fact, look at that, it lines up damn near perfect. So is that a possibility? It is, right? I'm a bear, okay, but traders have to be open to all possibilities. So if this thing turns around, heads north, breaks out of the top of this triangle, right now that'd be somewhere around 11,000 to 11,200, right? If it breaks out of that, then I'm going to have to look at going long, at least on a shorter time frame, meaning that maybe it goes up to 17,000 and then it dumps, right? I wouldn't like that. That would be probably the worst case scenario for me, and I'll tell you why. Because it would make it very difficult to know what the market was going to do. You never know, right? But you tend to get a little bit of a feel the more you do this. And it's very easy, or it's been very easy, for me to say I'm bearish this entire time. Not been difficult at all, because to me this all looks like a very textbook, type of distribution, type of pattern, or textbook correction type of pattern where it's A, B, C, right? And you might be saying, James, there's no ABC there. There is. You just have to zoom out to the weekly, right? There is absolutely an ABC. A, B, C, okay? If we suddenly went up to 17,000, I would have no idea what levels to look for. It would be very difficult. Would it be that this was one giant move and I'd suddenly need to start looking at moves to the 61-point fib of this entire move? Or would this just be a correction and the new measurement would be from here to here? I don't know, right? It would be very, very tricky. And I'm not saying that I couldn't do it, but I certainly couldn't do it with near as much confidence as I've had in this move. This move has been very easy to be confident in. Even when people are, calling me names, and even when people disagree with me, even when people are, just ragging me like to death, it's been very easy to hold my ground because, listen, this was a parabolic move. Parabolic moves retrace. It's just what they do. But if we suddenly went up from here, it could very well be the case that this was indeed the quote-unquote correction, or it could be that this was actually not distribution and this was actually accumulation, right? Instead of this being accumulation, maybe this is accumulation, and maybe 17,000 ends up being a blip on the radar on the way to 30, 40,000. I don't really know. Okay, so for me, that would be a worst case scenario. If this thing goes up, it would make me very, very uncomfortable. I've said this many times in the past. I'm not a long-term buyer of Bitcoin at these levels. I would feel very uncomfortable. I might get, maybe 1 or 2 Bitcoin, maybe 3 Bitcoin at those levels and just kind of sit on it. But I wouldn't want to go really hard at Bitcoin. Now, if we drop down to 4,400, it's a different story. I can feel super comfortable and I can feel good investing down there. I'm not saying you should, but I could feel pretty good down there. And even if it dropped, 3,000, or even if it went down and filled that old gap down around 1,300, I wouldn't I mean, I wouldn't love it, right? I wouldn't be like jumping for joy, but I wouldn't be sweating it too much because 4,400 is an amazing deal on Bitcoin, and down at those levels, I would be, accumulating heavily. Again, depending on what the market is doing, things change, right? If it got down to that level and it still looked terrible, maybe I wouldn't be accumulating heavily. Maybe I'd keep waiting and see, right? Time will tell. But overall, I'm still super bearish. When we look at this level, again, all we did was we got rejected off the 61.8. We bounced off the 38.2, which is completely normal. We came up and we got rejected on the 50 at 11.5. You can see it right here. The candle snuck above it, but then closed right at 11.5. And then we got slammed down. And again, we found support on 38.2 Fibonacci level. This is on our big retracement from December of 2017 through December of 2018. Okay. So typically what you'll get is you'll get some kind of dead cat bounce off of there, and then you'll go down to the next fib, which in this case is down around $7,000. Okay. And then again, usually you'll get some type of bounce, and then, if you're going to go up, you'll go up. If you're going to go down, then you'll go down. Okay. So nothing has really changed. I'm feeling pretty good. I was really happy to wake up and see the market down. The only thing I wasn't happy about was I had put short orders in before I went to bed for 10.5, and I wanted those to fill. Of course, if they had filled, I would have woke up 4 figures richer. Instead, I woke up and realized that they didn't fill, and the market dumped. That part sucked. But that is trading. If we take a look at the 3 peaks and a domed house pattern, again, this is really very similar to the wick-off logic. We can see that I didn't draw this to scale. I talked about that in the comments the day I posted it. I wasn't thinking. But basically what I'm expecting is that the initial drop is going to happen sometime in August, right? We've kind of started that drop now, and that there would be some consolidation toward the end of October, maybe early November. So basically, this drop would start in August, and then the consolidation would happen through the end of October, November. And if we look, so far, we have, I posted it way back here. We've started to drop. This to me looks like a dead cat bounce, and I think we're just going to keep going down. So right now, on a shorter time frame, I'm kind of stuck like Chuck. And the reason I say that is because, see, my short was at 10.5. That was my short play, and I missed it. In fact, now that I'm zoomed in on a 4-hour, holy cow, look at this. I didn't even see that. Didn't even see it. How did I miss that? I don't know. But basically, the close of this candle over here was 10.457 on the left shoulder. So 10.457 would have been fine. That would have been an okay place to go short instead of waiting for 10. I waited for 10.5, right? Basically, the difference of about $50. I just cost myself over $1,000. That sucks. But yeah, this basically looks like a Head and Shoulders. And guess what? That is a 4-hour Head and Shoulders. These things are just everywhere right now. That has a neckline down around 97.59. So I guess I'll be watching that Head and Shoulders as well. That is on a 4-hour chart if you want to take a look at that. And it looks like its height is about right around $1,200. So if we break that, again, I don't know what TradingView is doing. $1,200 target, 1,297.59 minus 1,200 be right around 85.59. That's perfect. That lines up perfect with the CME gap. So I guess what I'll be doing right now is watching. This is probably the level I'll watch to see if I want to enter a short position, since I've kind of screwed up and missed the entry up here. Really kicked myself. That thing topped out at 10.478. My short was at 10.530. Wow, $60 difference. I totally didn't see this Head and Shoulders on the 4-hour chart. I do not know how I missed that. Anyway, 97.59 is the level I'll be watching. And again, it's going to be like a dominoes effect, because if this little Head and Shoulders confirms at 97.59, it's got a target of 8,500-ish. That's going to obviously push us down under 9,500, which would confirm the daily Head and Shoulders, right? It would also confirm the weekly Head and Shoulders. All these Head and Shoulders are going to start, confirming one after another, and it's just going to be a cascading effect, in my opinion. It's going to send us tumbling south, and all the people who are super duper bullish, it doesn't take a lot to flip their switch, right? You can tell that from the Crypto Fear and Greed Index. It goes from greed to fear in the blink of an eye, right? As soon as the quote-unquote dumb money realizes that we're not going up and that we're going down, the fear is going to come back of the bear market. And listen, point blank, this might not be near as quick as what I'm expecting, right? Corrections normally happen very quickly. Corrections normally last a few weeks, maybe 30 days. We've actually been going on this deal from June, until now. So we were already 2 months into this quote-unquote correction. It very well could be that we don't break 13,800 again until early 2020. In fact, that's what I expect. I expect if this is going to drop, I expect it's going to consolidate probably through November, maybe even December, and then start to slowly climb back up. I don't think we're going to get another parabolic rocket effect like this. I think it'll be a much more sustainable, much more healthy, uptrend. So time will tell. Please remember, I am literally some guy sitting in a spare bedroom. I'm not a financial advisor. Nothing in this video is financial advice. You should always do your own due diligence and seek out professional advice before making any type of investment in cryptocurrencies. Don't forget, you can check the description for links where you can follow me on Twitter, TradingView, and also where you can join my free Facebook group. This is James with Crypto Common Sense. Trade safe.